I'm joined now by the crypto king, Barry Silbert, CEO and founder of Digital Currency Group. Barry, great to see you again.
Hello, everybody.
Great time at the panel. And so I'll key off exactly what Bob said. The Bitcoin bottom is probably in. What caused that bottom, do you think, to be put in place? What caused that surge above 7,000 that we saw so suddenly, it seemed?
I think it's a lot of people were looking for the bottom. A lot of institutional money with dry powder looking for an opportunity to get in. And I think the bears just kind of ran out of energy, ran out of Bitcoin to sell. And I think from a technical perspective, it's starting to look pretty good. And when the chair of the Fed says negative things about Bitcoin, and Howard Marks says negative things about Bitcoin, and Ken Griffin says negative things about Bitcoin, and Bitcoin doesn't move, I think that's a really bullish sign.
You're clearly a believer in cryptocurrencies and all the platforms surrounding cryptocurrency. But when you have the Fed so outspoken against cryptocurrencies, when you have the head of the SEC so outspoken against ICOs and cryptocurrencies, aren't you swimming upstream at this point? I mean, does it feel too early?
That's the best part. That's the best part. I mean, that's really where you make money, when you're swimming upstream. And look, I started buying Bitcoin in 2012 when the price was $10. And I've gone through now 80% corrections, and this was like a 65% correction. It's the same old criticisms, and I think a lot of it is it's just they're uninformed. Because I think everybody on this desk, anybody who spends the time to look into what is this asset class, why is it important, why does it have such potential, they come out of it being a believer. They don't have to be running around like I am, kind of evangelizing, but they come out of it saying, I'm going to put some money to work in this asset class.
Barry, you mentioned institutional money was looking for an entry point here. From just the people that I talk to, it doesn't seem a lot of the traditional hedge funds, like the ones that were delivering alpha today, even have the infrastructure to invest in crypto assets. Do you see those more traditional hedge funds considering how to custody, how to trade these sorts of things? Is this the biggest pain point? Is there a strong interest other than the ones who are just crypto dedicated funds?
So the principals, the traders, they've been dabbling in crypto for years. The funds themselves, they're starting to put some money to work. One of our companies is Grayscale Investments, which is the largest asset manager in the space. We announced today, or published our first half report, $250 million raised to date across our 8 funds. 56% came from institutions. A year ago, 2 years ago, it was almost non-existent. So we're starting to see that money come in, but we need custody solutions. And I think what you'll hear from a lot of them is we don't want to be first, we want to be second. Fast second follower. We don't want to be last, we don't want to be first.
Barry, you've been first in a lot of this cycle, or at least different parts. Do you care more about the currencies and the tokens now, or do you care more about the platforms? And where are you guys investing, and how are you separating the two?
So we've invested in 130 companies. I would say it's entire spectrum, blockchain, wallets, exchanges. Candidly, on the enterprise blockchain, very little traction, very little evidence that there's product market fit. I'm really all about the store of value prop, and I'm all about the infrastructure that's required to create the on-ramps and the off-ramps for Wall Street to get involved in this asset class. And that is being built right now. 2019 is going to be an enormous year because it's going to be not just easy to get involved, but it's going to be socially acceptable.
When do you think we'll see the differentiation in trade between the different cryptocurrencies? They should trade very differently in theory.
I'm hoping that the movement of Wall Street into this asset class which is going to bring kind of more of a fundamental valuation approach to this asset class. There's thousands of them out there. There's only 5 that we like. There's only 5 that we have money in. The other 99%, I think, are going to zero.
What is your allocation?
All right, so we have 50% in Bitcoin, and this is the Digital Currency Group balance sheet. 50% in Bitcoin, 25% in Ethereum Classic, ETC, 15% in Zcash, 5% in Decentraland or Mana, and then our newest one is 5% in Zencash.
Do all of these have to be commodities versus securities? I mean, how do you? This is DCG's allocation, so you have to be careful in terms of regulatory.
Sure. Well, look,
issues.
Chairman Clayton has made it pretty clear that most or all ICOs are securities. So I'm pretty skeptical about ICOs. We don't really play in the space. We have companies that are involved, as an exchange or a wallet. But in terms of where we're putting our money, we're staying away from the ICOs and focusing on assets that have a store of value aspect to them.
Okay. How do you get this to be more mainstream for the institutions to come in?
Well, the infrastructure is being built. The custody solutions have to get rolled out. But frankly, for 12, 24 months, they've been researching and trying to build investment theses. And so we're really, really close to that happening. So like I said before, I think 19 is going to be a big year. I think the second half of this year, I think we have to see some consolidation. But the infrastructure will be there, and then it's who's going to be first.